So welcome, welcome, welcome. I would like to say that we welcome you as our new preferred residential lender, but you guys have been around since the beginning of time. So let us share the tea. What happened? What are we doing? What are we thinking? What do we need? And everybody, I encourage you to put your questions in the Q&A and I'll just kind of feather them in as we go. But you guys go ahead and get started and I'll start looking in the Q&A box.
A lot of you have already heard my version that in Empire Builders, so I'll hand it over to Dan.
Yeah, so everything that's happened has been for the better and for the good. I mean, obviously, as just kind of recap, we've made a decision really as Caliber as a larger whole in the Pacific Northwest region to move to Movement Mortgage. Obviously, I'm part of that. It's a move that is something that really is about product and growth and company vision and where the company wants to be in the future, and just in terms of 5-10 years from now. It also has a lot to do with support for this group and these kind of groups, just on how they're dealt with and the way that we do things within the group and all of the fun things we do with all the meetups and all those things and the things that we're going to grow and do together. There's just a support structure there that is amazing. There's very few national lenders. So there's very few lenders that can lend in all 50 states, and Movement is one of them. And so so from a standpoint of where we lend, what we do, all that's there is better. So we've got more products, better stuff. Caliber was an amazing home for a long time. A little bit of the why was, with everything, times change. And about a year ago, Caliber sold to a new parent company. And that parent company just kind of decided that the way that their vision was in the future for how they wanted some of their sub companies to be just wasn't in line with what we needed. And so it was going to be better to move. And so, like I said, this is something that it's not by any means a hostile move. I'm actually still at Caliber today, so I'm physically still an employee there. Scott, however, is not, because they know what we're doing and they are giving us the time to make sure that the existing loans that we have in the system are closed out. There's no issues there. It's a seamless transition. And obviously the semi-retired team has already moved over to Movement and is already working there and originating loans. And so, the best way to put it is it's the same team, New Jersey. That's literally the only thing that's changed. All the products that are there that we were using and utilizing, and now more products are going to be available. So it's going to be something that, no one's really going to see a blip in the screen at all, other than there's going to be a different logo at the end of the email.
Christina asked, I think, Scott, you addressed this in your email, but I have a pre-approval from Caliber. Now that you have moved to Movement, do I need to send in a new application?
So the short answer is yes. And so, that's one of the things that is a little bit tricky about this sort of move is that we will have to start over some of the files with the folks we've been working with, but a lot of those really needed to be updated anyway. And that will allow us to start a new pre-approval for a new 120-day period and be able to actually run numbers for folks. And with our, just some of the highlights that I've already seen, we're actually in training today. I am. And, there's 3 big things with the move. And number one, Dan hit it. It's just the commitment to the mission of retail lending, and specifically our support of semi-retired and Zero to Freedom and Empire Builders. And in addition, we do expect to see sharper pricing, which will be nice. More products, especially in the jumbo space, including a good 10% down jumbo second home, which we all know is very important. And quicker turn times. I mean, one thing Movement is known for is closing loans about as quickly as anybody in the industry. And I got some firsthand training as to how that is kind of one of their mission statements this morning. And that's not having too onerous of conditions and just really being a dedicated, solid retail lending platform.
Christina said, thanks. And then Christina King says, how does this affect existing mortgages?
It doesn't. Those mortgages will stay at the previous lender until we refinance them, which we will likely be doing over the next, and we can get into this later, but I do think we've seen the peak in rates. I think that was November 10th. And we should expect to see lower rates going forward. And so those loans will stay at Caliber until they're sold or refinanced.
You were calling that one.
What's that?
when we met last. You guys were calling that when we met last. That the
Yeah, no,
rates
I
were
mean,
gonna go down
yesterday, I mean,
sooner
just
rather than
today,
later.
yeah, just today, actually, the inflation numbers were released and they did exactly what we had anticipated they were gonna do. And so, I mean, the market kind of came off really well this morning. It kind of backed off a little bit as the day went on, but the trend right now is definitely in the favor of rates going down, and we're gonna probably continue to see that for 2 to 3 months going forward.
So if their loan is with Caliber and if it's on auto pay and all, everything, it just kind of keeps
It's
on.
fine.
Yeah.
Yeah, I
rolling.
mean, mortgages, so Movement's a servicer just like Caliber is, but embedded within the note and deed of trust of every loan that's issued is these loans are transferable. So lender, regardless of if you're 100% servicer or not, you're gonna sign it, the customer signs a document that says, hey, they understand that their loan can be transferred. One of the things that, that just to touch on real quick, that New Res, which is was Caliber's new parent company, they are actually, in an easy way of saying it, disbanding the Caliber portfolio, and they're moving all of those loans over to the New Res portfolio. It's still the same company, but they're actually changing the look and feel of the statement, and it's moving from one company to another. It's all part of the same, overall organization, but they're moving those loans over there, and that's part of the changes that we're seeing. So that wouldn't be something that should alarm any of the students. They're going to get a letter in the mail. The transfers started about 30 days ago, and they're going to go all the way through February of next year. And so, they may not have gotten a transfer yet, but that, if they've done a loan with Caliber will no longer be a servicer anymore, effective, by the end of February. All those loans will be in the New Res portfolio. Movement is the same way. They service all of their loans and their portfolios there. They don't really sell anything off, but obviously when we ever generate a refinance, or Movement could go out and buy loans, all that kind of stuff, those are going to go into their servicing portfolio and be there. But yeah, no, we, everything that is with the existing customer, their app should still open and work, and they should still be able to get in and look at their loan, make their payments, all that kind of stuff that they're doing now.
Yeah, I was impressed that it was even the same loan number. I'm like, this is like
Yes.
magic.
Yeah, just like yours, mine got transferred from Caliber to New Res as well.
Yeah.
Yeah, and everybody's is going to get transferred. And
Yeah.
so that's just something that, again, that's part of the master plan that started about a year ago, is they're just going through and making changes to the corporate structure. And that'll be done hopefully the end of February.
Now, let's talk about real business, because for most of our investors, the servicing part is kind of on autopilot. And as a person who is a borrower, the front end, you don't want any surprises. And that's what I have always loved about working with Caliber, is they say it's cleared to close. Those are just like magical, beautiful sounds, but once it goes into underwriting, I mean, compared to industry standards, underwriting being cleared to close, not necessarily very often. But with Caliber, I felt like if it went into underwriting, I was ready to do the happy dance. So are we going to be just as spoiled with Movement?
I think it's going to be dramatically improved.
It's going to be better.
Honestly, dramatically improved. And, let's be honest, we've done hundreds and hundreds of loans for the semi-retired community. Not every transaction goes that smoothly. That's just the name of the game. But again, that's really what we were focused on in our morning meetings this morning. And I expect our process of manufacturing the loan, that process to improve with Movement, and potentially significantly.
Yeah, Movement's front end technology is a little bit better than Caliber's. It doesn't mean Caliber's was bad. It's just in terms of the way it's integrated and the customer experience that we've been told and kind of already seen is that it's going to be a little bit improved. What's very interesting about Movement is that they have actually gone in and some of the people that they've hired on the consumer information side, in terms of technology side, the chief information officer and the people that are going to build out all the tech, they're the same people that built out the technology for Caliber. And Caliber had a lot of great things about their technology that was really, really good. But there's never a person out there that's 100%, right? Some people are really good in a certain space, but then not as good in others. Where Movement's a little bit better is on the front end consumer experience, but they're going to build out the back end to be just as robust and probably very quickly. So that's something that's very encouraging.
One of the reasons that I love working for Leite and Kenji is is the integrity factor. And one of the things that touched my heart was when you were talking about your move and what was inspiring it, and you wanting to be able to keep your team together and keep like that. So can you talk a little bit about that and how movement responded? Because they didn't have to with like, because number of apps are down, so they didn't have to. So can you talk a little bit about that?
Yeah, so there, it's, and I don't want to ramble on too long about certain things, but if you take a moment and you dig into Movement's corporate structure, they're a company that's built on completely different, just their value system. It's privately owned. The owner of it never plans to go public. It's not going to be a publicly traded company. His entire goal is that the profits of the company get reinvested back into the community. So just the entire vision of the company is built around creating a platform for the people that work at the company, as well as for the people that come to the company, for them to thrive in, and to also have access to a lot of other industries. They're going in and they're buying, like they bought last year a financial planning firm, just because they want to be able to their not only their employees, but also for any of their customers to have access to that, for it not to be something that it's this big scary hole of like, what do I do and where do I go, right? I mean, anytime you deal with finances, it can be that way from just from where do I go and who do I deal with and who's the best person to deal with. And so they've just really got that kind of a vision. And so when that boils all the way down to, like you brought up, like the team and everything, they're like, yeah, they don't, when everything was kind of happening, they didn't even want to really talk about that. It was very strange to me. They really didn't care about the overhead. They were like, hey, we just want to get you guys over here. Let's get everything going. They know we're in a weird market. They know that volumes are down, but they also know that, like, okay, the volumes today are not going to be the volumes tomorrow. They're not going to be the volumes in 6 months. They're intelligent enough to know that this little cycle that we're in, okay, maybe it lasts another 12 months. I doubt it, but maybe it does. But they're not looking at that. They're not looking at the 1 year out of 10 that's bad. They're looking at, we need to make sure these people are ready to go. And when those other better years are around and it's crazy like it was 2 years ago, they don't want us to have to go rehire people and to gut our teams. I mean, they want us to run the businesses in a smart way where it's like, okay, if you're overloaded, then you're overloaded. But nobody right now, like, we don't feel overloaded. Yeah, the market's down a little bit and it's a little bit softer, but we're watching, which we knew was going to happen. I mean, on November 10th, the average rate for an owner-occupied residence was 7.3%. The average rate today is in the mid sixes. And then we had inflation come out today even better, and rates are just coming down. So they know it's right around the corner that we're going to see a lot different of an activity level. And it's a lot of resources to go in and get rid of people and then rehire people. And so they just didn't even want to really go there. Which was amazing. NewRez
is an excellent company, and they're an excellent mortgage REIT and mortgage servicer. And that's what their job is. Movement is a mortgage origination company, and that's what their focus is. And it's, even in the short time I've been here, it's just as clear as day to me. Yeah. So the way we explain it on our side is that it's direct to consumer. So Movement is 100% direct to consumer, wants that. And Caliber is moving away from direct. Correct. Yeah. Caliber was 100% direct to consumer. The person that NewRez that bought us, if you again dig a little bit, you'll see that they are not a direct to consumer company. They are a joint venture company, which is a completely different platform. It's just a totally different, again, that's a rabbit hole to go down, but it's just a different system and a different way of doing loans that is not the best way to do them, given the environment we're in and the way that we do loans for everybody within the group. And I appreciate your timeliness, because we're actually going to be refilming Zero to Freedom for this next course that launches in January. So thank you for doing that, so we don't have to go back and do all of that again. It was very timely. Thank you so much. It's interesting how well this timing really worked, because trying to do this in the middle of a new Zero to Freedom class would have been a nightmare, to be perfectly honest. And to answer Francisco's question about how you can subscribe to my newsletter about being updated about the market economy, everybody should still be getting that. I'm rebranding that, obviously, with Movement. So if you've gotten it before, and it basically, anyone that has contacted us, it goes out unless you opt out, and folks opt out, and that's fine. If you have been receiving it, you will continue to receive it. If you haven't been getting it, then just please send an email to semiretired@movement.com. That is our new team email address, and we'll make sure you're on the list.
Let's talk about what people don't know. So people, like, we work in our tunnels and we know what we know, but what you talked about them having more products. Talk like somebody who's never really thought about having a jumbo loan, someone who thought, like, just tell us how some of these products vary and what they would be, who they're targeted to, like, just so that we understand the different options of, you know.
It's a little bit of a shorter answer than it will be in a couple of days or weeks. We're still learning right now. So we know from the 10,000 foot level that they have additional jumbo investors, that they have some additional non-QM type of products, in addition to everything that we had before, where we're still pretty much doing, Fannie Mae, Freddie Mac financing. But they do have more jumbo investors, and there will be more info to follow on that. But we're still kind of drinking from the fire hose a little bit right now with all the new information with the new company. But by Thursday, I should have a better answer for that.
Have you heard anything about any movement doc loans?
Why
We
did
know
you
they
have,
have them.
why did you have to ask that? You're putting us on the spot, Kirsten.
That's my job.
So I'll stick my neck out there. Scott's gonna probably punch me in the arm when we're done. So yes, there's a few different specific investors in the country that have and issue the physician/doctor specific loans. Those are going to be your, lower down payment, jumbo type loans that have no PMI. Rates are better, but you have to be a doctor to do them. There's a categorization of who actually qualifies for them. And they do have, there's 3 main investors in the country, and Movement deals with 2 of them. So again, I'm going to shelve that and say more to follow, but I do know that was where we were going down the road at Caliber on that product development to get those. We were just a little bit behind Movement, but then again, the shift kind of made it to where those things kind of got put on the back burner, but they're already here. So there is no development that needs to be done. We just need the time to go in, grab them, learn about them as quickly as possible, which that's literally what Scott's doing today, tomorrow, and Thursday. So by the end of the week, he should be well-versed on what he can do. And it's all good stuff. There's nothing negative. We did not lose one program, just to be clear. We actually only gained programs. So there's nothing that was actually lost by coming over. A lot of people ask why we wouldn't have done this before or whatnot. And what's interesting is Movement did not have a big presence in the Pacific Northwest, so on the West Coast. They do have a smaller presence here, but Movement and Caliber of the past were so similar in lending style and structure that Movement really couldn't come in and, we had such a stronghold geographically on a footprint over here. Them trying to break into a West Coast market was not an easy thing for them to do. It had been very, very much of an uphill battle, just because we were just so similar. So it wasn't like they could walk in and say, oh, we do all these things better. They do some stuff better, but when you've got the reputation that Caliber had and everything, and, kind of like I said, the entire, most of the area is moving over here because they see the need to go to, a similar platform to like we were. So, Movement's going to fill a void, and they are obviously more than excited to have us because it was an area that they weren't able to really break into. And it wasn't because they couldn't, it's just they knew that we were already over here. And so now they could take all of us.
Nice. We did have a few questions come in. Anonymous asked, as a ZetaF alum, will you get updated ZetaF versions in January? So how we roll people forward is if you go into the most recent completed version. So when we start the ZetaF in the fall, everyone that isn't part of that will be rolled into the January content. If you would like to take part in that January live course, that's what we call a reboot. And those are $300 to do, but that way you have access to the Facebook community, the synergy and all the wonderfulness, the coaches, the mentors, the Q&As with Lady and Kenji. A lot of our cohorts didn't have, like right now we have the open office hours with the coaches. So that was a big reason why our course took a little price jump there was because we have like open office hours, so the coaches can be readily available a lot of days to answer questions live, and things like that. So yeah, so that is that question. And then if someone isn't on your glorious email list, what should they do?
Send the request to semiretired@movement.com.
Okay. And then Patricia, if you can put that in the chat for people, that would be fabulous. And what about commercial loans?
Still don't. do
I
commercial.
didn't come up with that one. That's Fran's fault. Okay.
Yeah,
I'm totally,
so that's a loaded, so we do have loans, just like Caliber has, the non-QM loans, which are not your Fannie and Freddie loans. Almost all versions of those, which is the same today at Movement, is that there are some products that allow, the investors to close in LLCs. That's typically the reason they're asking that, is they want to be able to close in an LLC potentially or whatnot. There is rules around that, obviously, on how they do it, but straight up commercial loans and land loans, you won't find a traditional residential mortgage lender that will typically do those two types of loans, because commercial or land loans do not have any improvements to them. So they are issued as commercial, and because there is no dwelling on it, so it can't be a residential mortgage. And then a true, when you say commercial, that encompasses so much. It encompasses office, retail. It encompasses anything over 4 units or 5 units on a multifamily.
Industrial.
It covers industrial. There's just so many things that it can, a commercial loan can cover. So those kind of loans would need to be done by traditional, almost all commercial loans like that are done by banks. So, I mean, that's just how they're done. And that's just the platform that they have to be done on. But there is some of that overlap now where, again, we can do stuff where an LLC is technically a business, closing it, but that's about the farthest that any real lender is going to be able to do in the current environment we're in market wise.
As someone who's worked with a lot of our community, I will say that the distinction between people who are starting with residential versus commercial is often the people who are 1099 versus W-2s. So what 1099 loan options do you have?
We still should have something that was similar to our Smart Self program. And 1099, again, 1099 income is fine. You just typically need to have at least, the guideline is 2 years of history. We can usually get away, especially for physicians, with as long as we have at least 12 months showing on one tax return, because that's usually going to be somewhere between 12 and 24 months. And we'll still have the ability to do that.
But what if they're an investor, so they've strategically, played that off, so they're only making $12,000 a year?
Then the LLC loan, or what we previously called our Smart Vest, which is a debt service coverage ratio loan, we do have that product available. And again, that really works well for 2 to 4 unit properties, because the terms are based on the rents that are collected and not the individual income or expenses of the client. And so, yes, we do have a DSCR loan available with Movement, just like we did at Caliber.
And that means that we don't use any income calculation on tax returns, W-2s, 1099s. Literally, there is no income documentation in the file. So that's the product that you use if there's somebody that does not have income on their tax returns.
So last time I put you on the crystal ball spot, you guys thrived. So I'm just going to do it again and just say, hey, tell me what this next year, what you see happening, because
that is true. I did say fourth quarter of 2022.
You did. Yeah.
Continued improvement. The bottom line is that not only is inflation moderating, but the 12-month year-over-year comps are more favorable, because there was high inflation 12 months ago, as opposed to over the summer when they were comparing new inflation numbers to inflation numbers from 12 months ago there was not as much inflation 12 months ago at that time. So as we consider, and the markets are understanding that, we have an inverted yield curve right now, which basically means that the current interest rate on the 2-year note is higher than the 10-year note, which shouldn't happen in a thriving economy. And so that typically precludes a recession. We may very well be in a recession right now, and one things that recessions do is bring down long-term interest rates. The Fed is already looking to pivot from a 75 basis point December increase to a 50. That hasn't happened yet, has it? It's been a
No.
wacky last week and a
No, the
half.
last-
I didn't
yeah.
think so.
Not yet.
But it's going to be 50 basis points as opposed to 75. And once the Fed pivots historically on their tightening cycle, it tends to reverse relatively quickly to lower and lower increases, to no increases, to rate cuts. And it would not surprise me if we see the Fed cut the federal funds rate by something before the end of 2023, certainly at some point in 2024 is my prediction. Thoughts?
I mean, all of the, the comments about the year-over-year inflation, that's where when you say, hey, what's the crystal ball going to do? I mean, just the basic stuff. I mean, out here on the West Coast, we're probably paying $1 a gallon less in gas than we were just 30 days ago. If you look at it, so year-over-year inflation, if people go in and look at it, it's a cumulative number that they're adding every month together to get an annualized figure. So where and why we knew that November 10th was going to be probably the day of reckoning for rates to start to turn is because if you can look back a year ago, the inflation numbers were really, really high in October 2021, November 2021, December, January of 2022, February, and March.
So you're saying there's a science to it and you don't have magical abilities?
There's a science to it. There is. And so
both things can be true.
Both things can be true. Yeah. So right now we are in month number 2. So the numbers that got released today were December 10th. Those are the November inflation numbers. So those inflation numbers of November 2022 replace November of 2021, and November 2021 were higher than November 2022. So therefore your year-over-year inflation goes down. The economic calendar right now for the next 4 months is set up for those numbers to be in our favors, to where you'll see rates on a monthly basis, or the trend for them to get pushed down, because you're going to see year-over-year inflation. As long as things stay the status quo, it's going to get better and better and better and better all the way into March. March of 2021, the inflation was really low. And then in June, April, May, and June, it was high again last year. So again, if you go look at the end of 2021 into the first 3 to 4 months, 5 months of 2022, as we're moving forward in time, we should be replacing those really high inflation numbers of the past with better ones today. And that's where you're going to see the market respond and rates come down, is when they see the year-over-year inflation keep working that way. That's going to mean whatever's going on in the world is working, and that the numbers are getting better. And that's what's going to bring mortgage rates down.
Tell us, some of our, heaven forbid, but some of our community have not done a loan with y'all. And so I'm not going to have you drop names, but let's say hypothetically one was like Rocket Mortgage, where there is this bait and switch with the so tell us a little bit about what the service of difference is, what they can experience versus maybe what they've experienced with people who weren't focused on service the way that y'all are.
All mortgage companies can do a good job, and lots of people have good relationships. And I talk to students all the time, and if they have a good relationship with a lender that they've used in the past, there's nothing wrong with continuing to use that. Those relationships are important and they're meaningful. The thing that we offer is that this is all that we do. I'm in the Empire Builders. I'm an alumni of the course myself. We have 6 people on the team, and we only work with Zero to Freedom alumni, Empire Builders, and anybody, basically folks who listen to the podcast. But if they haven't come through us through Leti and Kenji or a referral from our existing clients, we don't work with them. So we are dedicated exclusively. And all we do is look at investment transactions and second homes, refis and purchases all day, every day. And as folks that are listening also know, we are not about business hours. With a team this large, it means we're available. We're available on the weekends to talk to listing agents. We're available in the evenings, and that's just kind of the table stakes. But more importantly now is that we have the backing of a company who really believes in our mission, the way that Frank, just from my perspective, Caliber once did. and that had changed over the last 6 months or so. And, you know, to have that backing from the top of the house at Movement, it makes all the difference in the world when you're actually trying to deploy on the ground like we do.
The other thing which we've touched on numerous times is the licensing. I mean, we routinely work with, a client that lives in Wisconsin and they're buying a house in Florida and Texas and Oregon at the same time. So they're going to be hard pressed to find a loan officer out there that has all of those licenses. I mean, usually you'll find a loan officer that's licensed in, a state, and they might have the contiguous states around them that they're licensed in. But, finding someone that's licensed all over the country is very, very hard. And that's, probably, I know it's the service level and what we do and all that stuff is there, but time and time again, we have students be like, oh, thank goodness I don't have to go find somebody again. Cause they don't, again, they might use their local bank or that person that they love, but then all of a sudden that bank's like, yeah, well, we don't lend in Tennessee. Okay. So then they got to go find somebody, and we're able to fill that void for them. And they only have to work with us, and we can lend, take care of them everywhere. So it's, they
But
love
to that regard, it's very important that people start the process with you. I've heard people say, oh, I just looked at their company and I called, and then I didn't get the semi-retired MD closing cost credit. So it's important that because your office, no matter, can service the entire country, your
Correct.
particular team. Yeah,
That's exactly right.
Yep. So there's, there's a lot of value in that for the students and just everything that we do. And I think that it's something that going forward, as the investors grow more and more and more, and they put their footprint out farther, it's just going to be easier for them to get stuff done.
Any insight into what the Movement credit would be?
Same. Yeah. No,
We're not changing.
That's
Yeah.
not changing.
Yeah, no, I
Okay.
mean, we're gonna, yeah.
Can you
they're-
review that for people who aren't familiar?
Yes. For loan amounts over 250,000, it's a $1,200 lender credit. For loan amounts between 150 and 250, it's a $600 lender credit. And for loan amounts under 150,000 is a $300 credit. And not getting into specifics on the rates, but to answer the question, I can tell you that I have been beaten on rate twice in the last 60 days by Movement. So take from that what you will.
Dang it.
I love it.
Yeah.
Martha, I really appreciate that you guys dressed color coordinated. for the
And we
event.
didn't even,
It was, yeah.
it
Did
was
not
not a
get-
call. It was not a thing. Like, it just happens.
I'm in
It just
meetings all
happened.
day, so I had to have a collar on anyway. So
Yeah.
We love it. Well, we are so grateful that you came in to chat. If there's any more questions that people have, please feel free to either message me or put them in the Q&A, and we'll get those answered really quickly. So,
And then you obviously, Scott gave you the email. I mean, do you have that? So the other thing too is nobody's phone number's changing.
phone numbers are all
Phone numbers all the same. So I mean, if anybody needs anything, typically it's an auto dial within the team. I mean, we've been working remote for 2 to 3 years now. I mean, not 100%, but everybody pretty much functions off of their cell phone. So the numbers that people are used to calling, those are not changing. So Scott's entire team, they're easily found, and it should be something that it's a very seamless thing, and a new pre-approval is right around the corner if they need one.
and part of what, like you said, we have had experiences that didn't go as planned, and you've taken ownership in that. Tell us what that process should look like. If someone is frustrated or they feel like something isn't moving the way, say, what should they do?
Pick up the phone and call me.
Okay.
100%. Yeah, I'm always available. And in the event, anything can happen in mortgage lending. Fortunately, those things don't happen often, but that's what I'm here for.
I mean,
Awesome.
unless we know, I mean, obviously we know our files and know where they're at and what's going on, but unless they let us know if there's something that's not 100% perfect, unless they let us know, we can't fix it. So we just want to know. And it's that whole thing of they're never bugging us, call us anytime. There's everybody, like I said, all the phone numbers that everybody has, including mine, are my cell phone. And I don't give my phone to anybody else unless I leave the country or something. But I mean, it's like, it's on me. So if I'm getting a phone call and I need an answer to something on something, I'm reaching out to Scott. vice versa. I mean, and whenever we get a phone call, it's pretty much figured out within hours. It's not a very long time that it's not worked on.
Thank you so much. Is there anything else you want to share with the community? It doesn't look like any other questions have come in.
I think that covers it. Thank you so much for having us. We always appreciate it.
Thank
Oh,
you so much. We're excited
grateful.
for 2023. It's going to be awesome.
It is going to
Really
be
looking
awesome.
forward to it.
Awesome. Thank you so much, guys.
Thank
Thank
you.
you.
Have a good one. Take care.
Thanks.